Imagine the United States, the world's largest military spender, suddenly scrambling not for new jets or submarines, but for copper, nickel, and rare earth magnets. Picture Pentagon generals, used to commanding fleets and satellites, now sitting in emergency meetings over supply contracts for minerals. That's not a scene from a dystopian novel. It's the reality creeping closer as tensions with Canada collide with America's fragile defense supply chain. For decades, Washington assumed that critical resources from its northern neighbor were automatic. Canada was the quiet partner, supplying uranium, potash, zinc, cobalt, and rare earths without fanfare. But in 2025, Ottawa is signaling something new. Its minerals are not just commodities, they are leverage. With trade disputes escalating and China still holding the lion's share of global refining, the fear is no longer hypothetical. Every delay in copper shipments, every hint of rare earth redirection sends shockwaves through missile contractors in Alabama, Texas, and Michigan. This isn't simply about tariffs or trade. It's about whether America can still claim industrial dominance when even its closest ally can tilt the balance. And tonight, we ask, is the U.S. missile industry facing a crossroads it never prepared for? To grasp how this crisis took shape, we have to step back and look at the foundations of the U.S.-Canada economic relationship. For generations, Canada has been more than just a friendly neighbor. It has been a crucial supplier of the raw materials that fuel America's industrial engine. According to U.S. Geological Survey data, Canada supplies over 70% of America's potash, 50% of its refined zinc, more than a quarter of its niobium, and a fifth of its uranium. These figures matter because they directly translate into agriculture, energy, and above all, defense production. A missile is more than guidance software and explosives. It is also copper wiring, specialty alloys, and magnets built from rare earth elements. Without those, production lines go silent. This interdependence was formalized in 2020 when Washington and Ottawa launched their joint action plan on critical minerals. The Pentagon followed up by investing over $400 million into North American projects targeting cobalt, graphite, tungsten, and rare earths. MP Materials in California ramped up rare earth oxide output, while Canadian institutions like the Saskatchewan Research Council moved into refining neodymium-praseodymium metal, the key ingredient for defense-grade magnets. The idea was simple: create a North American mine-to-missile ecosystem that would reduce dependence on China, which controls more than 80% of global refining capacity. But 2025 has not been kind to that vision. Trade relations between Washington and Ottawa have soured over tariffs. Earlier this year, the U.S. slapped broad duties on Canadian exports, from steel to automobiles. Canada retaliated with a sweeping 25% levy on nearly $30 billion of U.S. goods. While some of those tariffs have since been rolled back, others remain in place. The political climate is now charged with suspicion, and it has given rise to speculation that minerals could be the next bargaining chip. Even without a formal ban, the perception of potential restrictions has rattled markets and defense planners. These market tremors are not just abstract finance. Every uptick in copper prices or rare earth futures filters directly into U.S. defense costs. Contractors in places like Huntsville, Alabama, long known as Rocket City, have reported difficulty securing steady supplies of rare earth magnets for missile components. Electronics producers in Michigan warn of potential layoffs if prices remain unstable. In Pennsylvania and Ohio, states where Trump has promised defense jobs and industrial revival, union leaders are now asking why promised contracts are tied to volatile supply chains. Meanwhile, Ottawa is playing a longer game. Successive Canadian governments invested heavily in refining and export capacity, positioning Canada as one of the only credible alternatives to China. That strategy has given Ottawa leverage it never had before. European capitals are courting Canadian suppliers to secure stable flows. Japan and South Korea are rushing to sign long-term contracts. Even Chinese firms have shown interest in deeper cooperation, with Canadian refiners. Suddenly, Washington is no longer the automatic first customer. It is one of many suitors in a crowded field. This shift is what makes the situation politically explosive. In the U.S., Trump has built his campaign narrative on the promise of Made in America missile jobs, with speeches across battleground states emphasizing national strength and industrial independence. Yet, when headlines describe halted shipments, spiking prices, or plants running short of materials, that narrative begins to crack. Layoffs or shortened shifts in states like Ohio or Pennsylvania do not just hurt local economies. They undermine the very foundation of Trump's political brand. Internationally, the optics are equally damaging. NATO partners that Washington has urged to increase defense spending now see the U.S. struggling to supply its own missile programs. European officials are quietly noting the irony. America, long the enforcer of alliance commitments, is suddenly exposed by its reliance on a neighbor. And Beijing, watching from afar, is using the crisis to highlight American vulnerability. Chinese state media has already framed the story as proof that Washington's industrial dominance is a relic of the past. So here we are. A supply chain built on assumptions of endless abundance is now showing cracks. Canada is not an adversary, but it has proven it can set terms that Washington cannot ignore. The Pentagon, once confident in uninterrupted access to North American resources, now faces a world where even its closest ally has options, and that perhaps is the most unsettling reality of all. The deeper story here is not about Canada suddenly turning hostile or deliberately crippling U.S. missile production. It is about America finally confronting the vulnerabilities it has ignored for decades. For too long, Washington assumed that military spending alone guaranteed security, but the reality is sobering. Without secure and resilient access to critical minerals, even the most advanced defense budgets cannot buy stability. Let's start with the paradox. On one side, the U.S. has been determined to reduce its reliance on China, which dominates more than 80% of global rare earth refining. On the other side, it has been slow to invest in domestic processing capacity. Mines in Nevada and California can dig ore out of the ground, but without refining plants, that ore is just rock. And building those plants takes years, billions of dollars, and regulatory changes that the U.S. political system has consistently avoided. This is where Canada enters the picture. Ottawa did what Washington would not. It spent the past decade pouring money into exploration, refining, and export infrastructure. Today, Canada is not just a supplier of raw materials, it is a refining hub with global demand. By prioritizing long-term agreements with Europe and Asia, Canada is signaling that its minerals are strategic assets, not automatic handouts to its southern neighbor. That does not mean Ottawa is cutting Washington off, but it does mean America has lost the monopoly on Canadian supply. For Trump, this creates an especially damaging political dilemma. His campaign message has been simple: bring missile contracts back to American soil, restore defense jobs, and revive the industrial heartland. But tariffs and trade disputes have destabilized the very supply chains those promises depend on. In Ohio, Pennsylvania, and Michigan, workers who were told they would be building parts for missile systems are instead reading headlines about shortages, delays, and layoffs. For a president whose brand is strength and deal-making, the image of being cornered by America's closest ally undermines that message. From an economic standpoint, the ripple effects are already visible. Copper futures in London have spiked. Rare earth prices are up more than 60% in just weeks. Defense contractors' stock values have tumbled as investors factor in higher costs and delays. Meanwhile, Canadian mining companies have surged in Toronto markets, reflecting Ottawa's new role as a global power broker in minerals. These movements are not just about numbers on a screen. They are signals that the balance of leverage has shifted northward. This crisis also highlights a larger blind spot. Supply chains are strategy. The Government Accountability Office has repeatedly warned that the Pentagon cannot fully trace its own suppliers, especially in areas like magnets, alloys, and electronic components. That opacity is dangerous. If the US military cannot identify where its inputs come from, it cannot protect itself from shocks. Transparency and diversification must now be treated as matters of national security, not bureaucratic details. In the end, the lesson is clear. America cannot assume that defense supremacy is guaranteed by tradition or spending levels. It must be rebuilt through secure, diversified, and transparent supply chains. Canada has revealed the fragility of those assumptions, not through hostility, but through asserting its own interests. The US has a choice. Treat this as a humiliation, or use it as the catalyst to finally invest in the industrial foundations of its power. Of course, defenders of the status quo will argue that all of this is overblown. They'll say Canada would never truly jeopardize America's security, that Ottawa depends too much on US trade, and that Washington's defense machine is too powerful to be shaken by minerals. On paper, that sounds reassuring. But reality has a way of mocking paper promises. Think about it. For decades, American leaders insisted NATO allies increase defense spending. Yet here we are, watching the United States struggle to secure enough magnets for missile guidance systems, while Canada, a NATO member, holds the cards. It is almost comic. The country famous for maple syrup and politeness is suddenly dictating the pace of America's arsenal. If irony could power missiles, the Pentagon would have no shortage. Then there is the Trump narrative itself. He promised workers in Ohio, Pennsylvania, and Michigan a renaissance of made-in-America defense jobs. But how can those jobs thrive when the key materials are hostage to trade disputes and foreign refining bottlenecks? Every campaign rally about reviving industry now risks sounding like an infomercial for commodities markets. Instead of, "We will build missiles here," it becomes, "We will build missiles if copper prices cooperate." That is not strength. That is dependence wrapped in slogans. And let's not forget China quietly smiling in the background. While Washington and Ottawa spar over tariffs, Beijing continues to dominate global refining. The Pentagon's own deadline to ban Chinese magnets by 2027 is approaching fast, yet the US still cannot guarantee secure alternatives. Watching America scramble for copper and rare earths is the best propaganda gift China could hope for. So yes, maybe this is more than just a supply chain hiccup. Maybe it is a reminder that even superpowers can be humbled, sometimes not by rivals across oceans, but by neighbors across the border. What we're witnessing is more than a trade dispute or a temporary supply hiccup. It is a turning point in how America defines security in the 21st century. Tanks, jets, and missiles may symbolize power, but without copper wiring, rare earth magnets, and refined alloys, they are nothing more than expensive shells. Canada has not declared economic war, yet its ability to influence global supply flows has revealed just how fragile Washington's assumptions have become. For Trump, the timing could not be worse. His promises of industrial revival and missile contracts now run headlong into shortages and price spikes. For the Pentagon, the humiliation is clear. America cannot project strength abroad if its defense lines stall at home. And for global markets, the message is undeniable. Minerals are the new weapons of leverage. The real question is whether Washington turns this crisis into a wake-up call or simply another chapter of blame shifting. If the US fails to rebuild resilient supply chains, the humiliation will not fade, it will deepen. So, what do you think? Is this the moment America finally takes minerals as seriously as missiles? Drop your thoughts below. And don't forget to like, share, and subscribe for more deep dive analysis.